Hey there, quick question for you. Have you checked your savings account interest payment lately? That little monthly notification from your big brand bank that pops up to announce you earn a mind-blowing 4 cents? If you're like most people, you probably took one look at that tiny fraction of a penny and thought, well, at least my money is safe. But here is the brutal truth. If your hard-earned cash is sitting in a standard big bank savings account right now, you are literally losing money every single day. Thanks to inflation, holding cash in a traditional bank earning 1/100% is like leaving your dollar bills out in the rain and watching them slowly dissolve. But what if I told you there is a totally safe, ridiculously easy tweak you can make in under 10 minutes today that could instantly boost your passive cash earnings by 40 or 50 times? Welcome back to the channel. Today we are diving into high-yield savings accounts, or HYSAs for short. We're going to break down why your regular bank is keeping you broke, how high-yield accounts actually work without any crazy risk, and the exact steps you can take this week to stop leaving free money on the table. Imagine you have a roommate named Bob. Bob asks to borrow $10,000 of your hard-earned money for a whole year. He promises to use it to make his own investments and earn thousands of dollars. In exchange for letting him hold onto your cash, Bob hands you a single crisp $1 bill at the end of 12 months and says, "Thanks, buddy. Keep the change." You would probably kick Bob out on the street, right? Well, guess what? That is literally what big traditional banks do to you every single month. When you deposit your money into a major national bank, they do not just sit on it in a dark vault like Scrooge McDuck. They lend your money out to other people for mortgages, car loans, and credit cards, charging those borrowers 6, 8, or even 20% interest. Then, after making massive profits using your cash, they hand you a tiny fraction of a percent as a thank you. Enter the high-yield savings account. Think of a high-yield savings account like a VIP lounge for your cash. It works exactly like a regular savings account, but with one massive upgrade: the interest rate. Online banks can offer high-yield savings accounts because they do not have to pay for thousands of physical brick-and-mortar locations, giant neon signs, or armies of branch managers. They pass those operational savings directly back to you in the form of higher interest rates. And the best part? Your money is just as safe. As long as the bank is backed by the FDIC, which stand for the Federal Deposit Insurance Corporation, your deposits are insured by the United States government up to $250,000 per depositor per bank. That means even if the online bank goes completely belly up tomorrow, Uncle Sam guarantees you will get your cash back. It is literally the exact same safety net that big legacy banks use, just with way better perks. Now, let us look at some real numbers so you can see just how insane this difference really is. Let us say you have been working hard and managed to build up a solid $10,000 balance. Maybe it is your emergency fund, or maybe you're saving up for a down payment on a car or a house. If you leave that $10,000 sitting in a traditional savings account with a standard interest rate of 0.01% APY, that stands for annual percentage yield, you will earn exactly $1 in interest after a full year. $1. You cannot even buy a decent cup of coffee for $1 anymore. Now, let us take that exact same $10,000 and move it into a high-yield savings account earning a 5% APY. After 1 year, without lifting a single finger or taking on any market risk, your money will earn $500. That is $500 of pure, effortless passive income just for moving your money from bank A to bank B. That is enough money to pay for a weekend getaway, cover a couple of months of grocery bills, or stream your favorite TV shows for the entire year. Let's take this a step further and look at a bigger example over a longer timeline. Imagine you have an emergency fund of $25,000. In a traditional bank earning 0.01%, after 3 years, you would accumulate about $7.50 in total interest. That is barely enough for a fast food meal. But if you keep that $25,000 in a high-yield savings account, averaging 4.5% APY over those same 3 years, compound interest starts doing its magic. In year 1, you make about $1,125. In year 2, you earn interest on your original money plus the interest you already earned, bringing in another $1,175. By the end of year 3, you will have earned over $3,500 in interest alone. That is $3,500 that your regular bank would have happily pocketed for themselves if you had left your cash sitting in a traditional account. So, why does everyone not do this? The main reason is simply lack of awareness or the mistaken belief that switching banks is a huge, painful headache. People assume high-yield accounts are tricky, risky, or locked up like investments. But the reality is that high-yield savings accounts are completely liquid, meaning you can transfer your cash back to your checking account whenever you need it for an unexpected emergency. If you're ready to stop letting your big bank profit off your patience, here are 3 simple steps you can take this week to upgrade your savings game. First, check the APY on your current savings account. Log into your banking app right now, look at your account details, and find your interest rate. If that number starts with 0.0, it is time to make a move. Second, research top-rated, FDIC-insured online banks. Look for established brands like Ally Bank, Marcus by Goldman Sachs, Capital One, or Discover. Check for 3 key things: no monthly maintenance fees, no minimum deposit requirements, and an easy-to-use mobile app. Opening an account usually takes less than 10 minutes online from your couch. Third, set up an automatic recurring transfer. Once your new high-yield account is linked to your primary checking account, schedule an automated transfer for every payday, even if it is just $50 or $100 a month. Automating your savings removes temptation and lets compound interest build your wealth quietly in the background. Before we wrap things up today, just a quick reminder that this video is created strictly for educational and entertainment purposes and does not constitute personalized financial advice. Upgrading your savings account is truly one of the easiest financial wins available today. It costs you nothing, takes almost no time, and puts real money back into your pocket where it belongs. If you found this breakdown helpful, hit that like button, subscribe to the channel, and drop a comment down below letting me know what interest rate your bank is currently paying you. Thanks for watching, and I will see you in the next video.